The opinions expressed in this show are the views of the host and not necessarily that of WTRW, 94.3 The Talker, or the Bold Gold Media Group.
The following presentation is paid for by NJC Investments, who is solely responsible for its content.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities offered through Lee Baldwin & Company, LLC. Member FINRA SIPC.
Portions transcribed.
Good Saturday morning and welcome to the Your Financial Future program here on 94.3 FM The Talker. My name is Nick Colorossi of NJC Investments. I am a certified retirement counselor, and our goal on today's program is to help you to become a better long-term investor. Now, if it sounds a little bit different this morning, it certainly is. By circumstance, we are phoning the program in this morning, but that makes no difference to you. We have a lot of ground to cover, and we will be getting to that in just a few minutes. We are going to be talking about 3 dividend stocks for retirement, stocks that pay higher dividends that can help you with that retirement nest egg. We are also going to be talking about the 5 top stock picks updated now from the Motley Fool. We're going to continue our inflation hedge ideas. I know a lot of investors worried about the possibility of inflation. We have some inflation hedge ideas, including some high dividend funds that will give you a monthly income stream. And we have some stocks to talk about that at least one analyst thinks can make you a millionaire over time. You don't want to miss that. Along the way, of course, I will catch you up on where we stand in our markets year to date, and I'll give you my take on recent market volatility. Before we get to all that, let me first introduce the man back at the station pushing all the buttons to make this program possible this morning, our producer extraordinaire, and that, of course, is Mr. D.C. Taylor. Good morning, D.C. How are you?
Good morning, Nick. Good. How are we doing?
I am doing just great as we close out March, head into April and Easter week coming up. It's springtime. What could be better? What's the weather looking like this weekend, DC?
I got a mostly sunny Saturday here, about low to mid 60s, and then tomorrow we might get some showers, low to mid 60s again. So you know, good. Today's a good day to get outside.
I got a lot of things to do outside myself. I'll take that sunshine any day of the week. Well, DC, I just want to remind everyone before we get started with the investment information, should you have any questions on anything that we cover here on the Your Financial Future program, or if you would like to get a question in to Mitchell's mailbag, you can contact us directly at NJC Investments. We're at 570-586-5030, or you can drop us a line through our website, njcinvestments.com. My email address is nick@njcinvestments.com, and we love hearing from our listeners. We are so glad you're out there. Never hesitate to give us a call or drop us an email. D.C. Taylor, in just a minute, we are going to pick up where we left off last week. You remember we ran a little bit short on time. I wanted to get some dividend stocks in for retirement, according to Investor Place. That's where we will start in just a minute. But just a quick reminder, the IRS has pushed back your tax filing day. Aren't you happy about that, D.C. Taylor?
gives me a couple more weeks to process my paperwork.
Me as well. So the IRS filing date for your taxes in 2021 is now May 15th. Gives you that extra month, but it also gives you that extra month for your IRA contributions if you haven't made an IRA contribution, whether that's a traditional IRA or a Roth IRA for the calendar year of 2020. You still have up until May 15th to make that contribution. $6,000 if you're under the age of 50, $7,000 for those of you 50 or older. Don't let these years go by without making those contributions. Why? Because you can get tax-free growth, and in the case of a Roth IRA, tax-free withdrawals are possible in retirement. The government limits you to $6,000 and $7,000 for a reason. They don't want to see you making all that tax-free return. They want to tax every dollar that they can. They give us a little bit. Take advantage of that little bit. If you have an IRA and haven't funded it, or if you want to look into the possibilities of opening a new traditional IRA or Roth IRA, you want to find out how that's done, it's very simple. You can always give us a call at NJC Investments, 570-586-5030. We'll show you how easy that is to do to make those contributions to open that new IRA as well. All right, DC. Well, before we move on to this week's topics, including the volatility we saw in the markets last week, I want to finish up where we left off last week. I wanted to get some dividend ideas in. We ran a little bit short, so we're going to get those in quickly today. This article comes to us from investorplace.com. It is from March 15th by Bob Shura, and you can check this out on your own right on investorplace.com. It's on the free side, and the article entitled 3 Top Retirement Stocks for Reliable Dividends. Now, as always, these are not recommendations from me to you. I do not know your particular circumstances, so check this out on your own. Do your own due diligence if you think this would be of interest for your own portfolio. And then, if we can help you in any way, you can always reach out to us at NJC Investments. The article starts off, DC, by saying investors in retirement may desire additional income, and those that don't have a pension are likely relying on Social Security and their retirement portfolio to cover their expenses. And that's how most people are relying now in retirement. And the article says, of course, these stocks need to be safe. Investment vehicles in your retirement portfolio need to be safe. And this is especially true for high-yielding dividend stocks, and that's what this article is about, DC. Shura says investors who build a portfolio of top retirement stocks, such as utilities, can rest assured that their income is secure and likely to increase over time. And you can tell right away he's talking about utility stocks for your retirement portfolio. He gives us 3 picks. One we do not own for current investors at NJC Investments. The other 2 we do own for certain investors for full disclosure. The first one we do not. That's American Electric Power. The symbol is AEP. Consolidated Edison is next. The symbol is ED. And the Southern Company, the symbol there is SO. Again, we do own some Consolidated Edison and some Southern Company. Let's take a quick look why Shura likes these stocks, starting with American Electric Power. American Electric Power has been in business for well over 100 years and is one of the largest regulated utilities in the U.S. They provide electricity transmission and distribution services in 11 states using a variety of energy sources, including coal, natural gas, renewables, and nuclear. Sounds like they have it all, DC Taylor.
That's a wide assortment there.
That's right. AEP is the symbol. They are trading at about $84, 52-week high, $94, 52-week low, $65. AEP has a current 3.6% dividend. Now, remember, these dividends are paid on a quarterly basis. When I'm giving you these dividend amounts, that is your annual dividend yield. Next up, the second company on Chura's list is Consolidated Edison, a holding company for Consolidated Edison Company of New York that supplies electricity, natural gas, and steam. They still use steam in New York City, D.C. Taylor.
Ah.
How about that? They natural gas, electricity, natural gas, and steam to New York City and Westchester County in New York. And the company also owns utilities that operate in New York and New Jersey. Consolidated Edison, symbol ED, trading at about 74. The 52-week high is 90. The 52-week low is 62.03. And they have just about a 4.3% dividend yield on ED. And the last of the three, again, these are picks from Bob Shura, writing for Investor Place from March 15th. You can look this article up. It is free on the internet. And he is talking about three companies he believes would be safe dividend players in your retirement portfolio. His opinion, not ours, but these are something certainly everyone can do their own due diligence on. SO is your symbol on Southern Company, and this company supplies electricity to more than 4 million customers in Alabama, Georgia, and Missouri. In addition, the company also counts 4.3 million people amongst its natural gas customer base in Georgia, Illinois, New Jersey, Tennessee, and Virginia. Southern Company SO trading at about $61, $64.93 is the 52-week high. $41.96 is the 52-week low, and also has just about a 4.3% dividend yield. Pretty decent yields from these utility companies. Of course, there is risk to all stocks. Even the utility companies, DC, can go up or down. These, again, are Bob Shura's top 3 retirement stocks for reliable dividends, according to his article in InvestorPlace.com. Well, D.C. Taylor, we got last week's business taken care of, and I'll just say as an aside, all three of those companies, even with what was a difficult up and down week last week on Wall Street, all three of those companies are trading a little bit higher than where we were going to do last week when we were going to do them last Saturday. They're a little bit higher this Saturday, for whatever that's worth. Thanks again for tuning in to the Your Financial Future program with Nick Colarossi of NJC Investments, the phoned-in version today. And thanks for allowing me to be the soundtrack for your early Saturday mornings. DC, just a quick wrap-up here of the past week. We're hearing so much investor anxiety. The markets seem to be one day all the way up, well, next day all the way down. We are still trending higher. Just a quick take on what I believe is going on in the markets. There's a battle right now going on between growth and value. Value, for the first time in over 5 years, maybe even longer, has surged to the front. We see the Dow higher than the NASDAQ. I don't remember the last time we saw that. Do you, DC?
I don't remember.
I don't either. It's been a long, long time, but value has been outperforming recently. But if you remember, we had a 10% correction in the NASDAQ, and the very next day we had a 5% bounce back, which is unbelievable. So we still consider having both growth and value as optimal for stock portfolios. A little bit of growth, a little bit of value. We've talked about that barbell approach to the stock or the equity side of your portfolio. We are still looking for higher markets throughout 2021. Why is that? I think you're going to see a lot of activity in the economy as our country reopens. Whether they like it or not, the country is reopening across the board, slowly but surely in certain areas, quicker in other areas. The Federal Reserve now looking for GDP of 6.5% or better. What's GDP? Our gross domestic product. That's how we measure the growth of our economy. DC Taylor, do you know how long it's been since we've seen a 6.5% economy?
I'll go with at least 20 years.
At least 20. It was 1984.
All right.
Back in the Ronald Reagan era, the last time we saw 6.5% growth. I have seen estimates as high as 9% growth for the year of 2021. We're seeing very good corporate earnings. We're seeing a lot of support from the Federal Reserve. They have said they will not raise interest rates until at least 2023. Do you want to know why they won't raise interest rates, DC Taylor?
Why is that?
We can't afford to raise interest rates with all the debt we're piling up. We'd go broke, right? They're going to do everything they can to support interest rates staying low as long as they can, and that is generally good for markets. So we like growth. We like value. We like having a little bit of both. I am more cautious on bonds. You do not want to be overweighted in traditional bonds when interest rates are rising. Now, market rates are rising. We're seeing that on the 10-year Treasury. I do not believe they'll go much higher. At least I do not think they're going to go aggressively higher. They're drifting up on that 10-year, so keep an eye on that. But we will see stimulus dollars coming into this marketplace. We will see good corporate earnings, at least for the next few quarters, and we will see investor and excitement, I think, carry our markets higher. On Friday, we had a consumer confidence number that had the highest reading, DC, from consumers, the highest reading since 2009. I would say people are ready to open up and get going. What do you think, DC?
They're ready to rock and roll. You got it. We got to get open.
Absolutely, and I think that will be a positive for the economy, a positive for our markets, at least for the foreseeable future. Are there problems on the horizon? There are always problems on the horizon, things to worry about, right? What worries me most right now? Keep an eye on that 10-year Treasury yield. As I said, I don't think it will go much higher, but it has doubled faster than any time in history, now trading about 1.6, 1.7% on a yield basis. If that were to go dramatically above 2%, that would worry me. What else? The tax hikes that I hear rumblings about, that would be a negative. I do not think that tax hikes will be passed in any major way on the short-term basis. If I'm wrong on that, we get extreme tax hikes, that could certainly be a negative down the road. So we have to keep an eye on that. We also have to keep an eye on inflation. A little bit later in the program, we are going to give you some ideas, and we've been doing this over the last few weeks, ideas on how you might hedge your portfolios for inflation down the road. But as we see it today, I think it's a risk-on market. I think the short term should be positive. We'll see how that goes, see how that plays out. We'll be here every Saturday to update you on our opinions and, of course, recap where we stand in the market. I will say this, DC Taylor, you need to be a long-term investor in these markets. You need to have a longer-term focus. Of course, invest for today, and tomorrow will take care of itself. Try to keep your politics out of your portfolio. I know a lot of people worried about some of the things coming out of Washington. Don't let that affect your portfolio. You are a long-term investor. Do not try to invest for the end of the world. DC Taylor, the end of the world only comes once, right?
That's it. And when it comes, it comes.
And your money won't make a difference if that's the case. So don't worry about that. Don't try to invest for the end of the world. And hey, we live in northeastern Pennsylvania. Everything gets here 20 years later anyway, so we'll be in good shape.
Exactly.
Let me just finish up with an idea about time in the market instead of trying to time the market. Time in versus timing the market. If you take the market since 1950 through 2020, DC, if you go by day, 54% of the days are up, 46% are down, right? It could drive you crazy.
Right.
If you go and take it by months, now we're looking at 60% of the months are up months in the market, and this is the S&P 500 since 1950. 40% of the months are down months. If you take it by quarters, 67% of the quarters are up, 33% of the quarters are down. Now we're getting into why you want to be a long-term investor and look at the years instead of the days. If you take it by years, since 1950, the S&P has been up 73% of the time and down 27% of the time. Let's take it by 5-year rolling time periods. In 5-year rolling time periods since 1950, the S&P is up 79% of the time. If you go out to a 10-year rolling time period since 1950, the S&P is up 89% of the time, only down 11% of the time. Those numbers all according to BTN Research. That is why you need to have a long-term focus on these markets. Stay diversified, stay invested for the long term. With that, DC Taylor, let's take a break right here. Let's thank our friends at Seidel's Restaurant in North Scranton for sponsoring this portion of our program. Spring has sprung. It is the Holy Week of Easter. Seidel's is open. I've got an idea. Why don't you get your reservations in right now to this great classic Italian-American bistro right here in our own backyard? I promise you, you will not be disappointed. You're listening to Your Financial Future on 94.3 FM The Talker with Nick Colorasi. We're back after this brief message. We hope you stay with us.
If you're searching for a special dining experience, Seidel's Restaurant is your home for great taste. Seidel's Restaurant is one of Scranton's elite fine dining establishments, specializing in Italian-American contemporary cuisines. At Seidel's, generous size entrees are prepared with only the highest quality ingredients. So whether you're having a meal for business or pleasure, it's sure to leave a lasting impression. Seidel's Restaurant has mouth-watering Italian-American contemporary cooking with a delightful ambiance. At Seidel's, you are certain to find unique specials for what you're craving. If you can't find an entree off their elaborate menu, just ask the chef. He can create an off-the-menu meal for you. At Seidel's, the owner is also the chef. Seidel's is located on the corner of Main Avenue and Tripp Street in North Scranton. They are now accepting holiday party reservations and on- and off-site holiday catering. 343-6544. That's 343-6544. Make it special. Make it Seidel's.
Welcome back to the Your Financial Future program here on 94.3 FM The Talker. My name is Nick Colorasi. I am a certified retirement counselor with NJC Investments, helped along, of course, by our producer extraordinaire back at the studio, Mr. DC Taylor of Bold Gold Radio fame. How you doing, DC Taylor?
All right, Nick. We're getting into a pretty nice weekend here, so looking forward to a nice spring weekend.
Yeah, I am as well, and I hope that everybody can get outside. Everybody wants to do a little spring cleaning, but you got to get outside to enjoy the fresh spring air. Got a little sunshine this morning, and should be a great week, DC.
Absolutely.
Hey, I want to just go back. We finished up last segment talking about why I'm excited about the short term on the market, and I am. I think there are way too many good things happening out there to slow us down dramatically right now. But yes, I am concerned about the long term. I do think somewhere down the road, DC, if we keep on this path where we are raising regulations on business, where we are talking about raising taxes on business, and I've heard anywhere from 28% to 35% corporate rates that they're starting to talk about. If that comes to pass somewhere down the road, there will be a pivot point, no doubt about it. There will always be something to shift some of your investments to make changes in your portfolio to be more defensive if we have to. And I came across a quote last week from, did you see former Clinton Treasury Secretary Larry Summers, you might remember that name, DC.
Yes.
He said about the plans coming out of Washington. Now, a Clinton Treasury Secretary on the Democratic side, he said about the current plans coming out of Washington, this is the least responsible fiscal macroeconomic policy that we've had for the last 40 years. He's talking about all this money printing. He's talking about the COVID relief plan that had 9% COVID and a lot of extra spending in there, right, DC?
Yeah.
He's saying this is the least fiscal responsible plan we've seen in the last 40 years. I think he might be wrong, though, DC.
Really?
Yes. I think it might be the least responsible plan ever. I think we need to, we reel some of the spending in, some of the money printing in. We'll see. You plan for today, and for today things look good. Maybe something will change as we go, but if there's a pivot point down the road to be more defensive, we'll keep you apprised of that as well. Well, D.C. Taylor, this is the time we usually share a coffee. I'm just wondering if you were having a coffee there in the studio.
I am having a nice hot cup of the Bunny's Brew, so it has like a little marshmallowy taste, I suppose, to it.
Bunny's Brew and Easter just around the corner. Myself, the only thing I have here today is a good cup of 8 o'clock dark Italian roast, my favorite. So I'll toast you from here.
Nice.
I hope you enjoy your Bunny's Brew. I'll have my dark Italian roast, and we urge everyone, why don't you grab a cup of whatever it is that gets your early Saturday morning started? Sit back and enjoy the rest of our program. And a lot to go on the program we have, DC. We're going to be talking about some inflation hedge ideas, including a couple that have really good monthly income streams, in my opinion. We'll talk about some stocks that might make you a millionaire someday, according to at least one analyst. And also, in just a minute, we are going to be talking about the latest stock picks from the Motley Fool, the top 5 picks from the Motley Fool, just updated this past Thursday. But before we do all that, you know that we like to catch you up on where we stand in the markets year to date. But even before we catch you up on those numbers, you know that we always like to give you a hot tip on some of the best investments that you can ever make. And that is investing in your family, investing in yourself, and investing in your own community. Well, DC, in spirit of the season, I have some Easter ideas coming up. Let me share those with you. We have the Easter Egg Express, the Stourbridge line in Honesdale today, tomorrow, and then Wednesday, March 31st, and Saturday, April 3rd, they will be sponsoring the Easter Bunny on his 2-hour round-trip train excursion. You know how much kids love trains, right?
Of course.
And with the Easter Bunny, what could be better? You can bring a basket for a special egg hunt, and all children will receive a gift bag. So you can check out the Stourbridge.net on the internet, or give them a call, 570-470-2697, with Easter Bunny excursions between today, tomorrow, Wednesday, and next Saturday. You ought to be able to fit one of those in for your kids or your grandkids, I'm sure. And also, one last one, DC Taylor, if you don't want to cook on Easter, usually the Hilton has a great Easter brunch buffet, the Hilton in Scranton, PA, the old train station, speaking of trains. But this year they are doing something different. They will be preparing bundles for takeout for anywhere up to 4 people, and you can do a cold bundle on Saturday, April 3rd, and they'll be from 11 a.m. to 2 p.m. And then on Easter, Sunday, April 4th, they have hot bundles to take out between 11 a.m. and 2 p.m. This is a great idea for you to be able to spend more time with your family on the holiest of holidays, enjoy it, and also support our local restaurants. Again, that is the Hilton in Scranton, the 1910 Pub, serving professionally prepared, cooked, and packaged hot and cold meals next weekend. You can get your reservations, Hilton in Scranton, and the phone number there is 343-3000 in the 570 area code. DC Teller, what do you have for us today?
I've got something where you're going to be. You got to lacing up your running shoes. So get training and get going. The Helping Hometown Heroes 5K and also 1 mile walk, Blakely Recreation Complex, May 15th, starting at 9 o'clock in the morning. It will benefit local veterans with Warrior Strong and Equines for Freedom. Come out and help support veterans and first responders. There will be awards for the top male and female runners in their age groups. Just to get the info, just go to your favorite search engine and type in Helping Heroes NEPA, and then that should pop up a link that'll take you to runsignup.com. Runsignup.com is the website you can sign up for all these runs and things. But again, just search for Helping Heroes NEPA and then click the runsignup.com link for that event. May 15th. So you got a little time to do your stretches and train and get motivated. Get out of the winter phase and get motivated.
All right. Well, thank you. That's a great community event and a great fundraiser.
Yes.
Well, thanks, DC. Time to get back to our markets. Here is where we stand as of March 27th, 2021. The Dow Jones Industrial Average still out in front of the three major averages. Dow Jones up about 6% year to date. The S&P 500 up about 4%. That's the broadest of the averages. And the NASDAQ, the tech-heavy NASDAQ, eking out about a 1% gain on the year. Price of a barrel of oil climbing last week, especially with that Suez Canal tanker. You saw that, DC Taylor?
Yeah, blocking everybody.
Blocking everybody. Over 200 ships blocked up behind that. A lot of our materials on hold, all kinds of goods and services being slowed down because of that blockage in the Suez Canal, and the price of oil rising because of a lot of oil tankers back behind that cargo ship. Oil now over $61 a barrel. The 10-year Treasury has moderated a bit. It is now in about the 1.6% range. Want to keep an eye on that. Want to keep that under 2. That would be a good sign, I think, for the rest of 2021. If it were to rise quickly from here and break through that 2% and hold through that 2% level, DC, that would be a negative for me for the long term. But I do not see that in 2021. I know economist Brian Westbury, we've heard from him on that issue. He thinks they will moderate in here. Let's hope he is right. Let's hope I'm correct as well on that. I think, DC, the only major market news we saw last week, it came on Friday. We already talked about that, with consumer confidence at the highest level right now since 2009. That should be a good indicator for our economy and for the markets on the near term. And let me close out my thoughts right now, DC, on the markets with just updating some current market rates. The prime rate remains at 3.25%. Money market rates, 0.10 if you are in money markets, DC. We call that 0 point nothing if you're in money markets, right?
Right.
The 5-year annual yield on a CD, the 5-year CDs averaging 0.48%. Not much better there. 30-year mortgages, 15-year mortgages. If you're in the mortgage market, the refinancing market, 30-year mortgages averaging 3.36%. 15-year mortgages, 2.58%. And if you're in the market for a new car, the new car loans for 48 months averaging about 4% right now. Those numbers according to the Wall Street Journal. Well, thanks again for tuning in to the Your Financial Future program with Nick Colorossi of NJC Investments. And thanks for helping to make us the #1 financial hour in all of northeastern Pennsylvania and beyond. Well, DC, let's close out this segment with the 5 latest top picks from the Motley Fool. Again, these are ideas. You can find these online at motleyfool.com. A lot of great information there. There is a public site and a private site, a site if you want to sign on to the premium site. It does cost a little bit of money, an annual fee, but there is a lot of great information on the free side as well. This comes from motleyfool.com. From this past Thursday, these are now David's best buys updated. Again, his ideas, not ours. We do own just one of these, DC. These are new names that we haven't talked about in a while, with the exception of one. I'll point that out as we go. The first up on David's top buys right now is ASML Corporation. This is trading at about $613 right now. This is a semiconductor company. You know, there's a shortage going on in semiconductors right now, and semiconductors needed in everything from autonomous vehicles, electric vehicles, your cell phones, your computers. Of course, everything runs off of the semiconductor. This is the company that produces the integrated circuits that allow the companies to build on those semiconductors, and their largest customers are Taiwan Semiconductor, Intel, and this company now switching over to the next generation of machines that will rely on EUVs, which are extreme ultraviolet lithography, which will allow the creation of even smaller components on integrated circuits. How small can they get, DC Taylor?
Make them super tiny.
Yeah, they are tinier and faster, right? The company predicts revenue growth in this coming year of 12%. Again, that is ASML, one of David's best picks right now, trading at about $613. The next one is the one that we do own for certain of our clients. Of the 5, this is the only that we currently own for certain clients at NJC Investments, and that is Disney. Heard of that company, DC?
Once or twice in my life.
Oh, me as well. Disney, DIS, trading right now at about $182 just a few weeks back. It was up near that $200 level. And, of course, they've struggled through the pandemic, but now reopening. Disneyland will reopen on April 30th, only 15 to 35%, but it's a start, right, DC?
It is a start. Good to hear that.
It's a start. All right, we're going to continually open up, and they have all those hotels. And, of course, now they have the streaming service, which is the star of Disney's lineup lately. They expect to surpass, a lot of analysts anyway, expect Disney to surpass Netflix in the next few years on streaming. That would be something to see. Disney DIS, again, trading at about $182 yesterday. Next up is Ecolab. Your symbol on Ecolab is ECL, and ECL is trading at $210. This is a provider of water treatment, energy efficiency, cleaning, and sanitation solutions to various industries worldwide. In 2020, revenue declined 6% due to the widespread shutdowns, but expecting to have a very strong 2021. I think they're in the right industry, DC Taylor, with all the sanitation solutions, correct?
The past year, we've heard about nothing more that we have heard about than cleaning products. So, yes, definitely.
And as more industries open up, they will need more sanitation and cleaning, and Ecolab's in that area. One of David's best buys right now, ECL. Again, these are from the Motley Fool, not recommendations from us at NJC Investments. We do not currently own this, but we will certainly do our due diligence as we urge you to do the same if you have an interest here. The next one on David's Best Buy list from March 25th, DC, surprises me. The New York Times. I don't know that we've brought up the New York Times as a stock pick on the Your Financial Future program in the past. Do you recall it?
I don't believe we have.
All right, let's see why David likes them right here. They're trading at about $48. NYT is your symbol. About a year ago, the world was shutting down as it struggled to cope with a global pandemic. And one effect of this outbreak has been an accelerating shift to the digital realm for many businesses and individuals. And David says, despite an overall decline in the news industry, the New York Times is doing well because they've been able to shift well to the digital services for providing news. Again, NYT is your symbol. New York Times trading at about $48 on Friday. And let's wrap it up. Since it is the weekend, DC Taylor, we can wrap it up with this pick. Boston Beer, also known as Samuel Adams. SAM is the symbol, trading at about $68 on Friday. And David says we're raising our mugs to Boston Beer and tapping it for one of our March Best Buy list right now. David says 2020 was an exceptionally good year for Boston Beer. Revenue up nearly 40% for the year, and operating income increased 68.5%. It can't have anything to do with the shutdown now, can it, DC Taylor?
You think people were imbibing a bit?
It could be.
While sitting in the house?
Again, these are not picks from us. These are picks from David at Motley Fool. SAM trading at about $1,145 per share. So your latest March picks from Team David at the Motley Fool, Sam Adams, SAM, New York Times, NYT, Ecolab is ECL, Disney is DIS, and ASML. If we can help you research any of those companies, if you have an interest in them, and to see if they're suitable for your portfolio, you can reach us at NJC Investments, 570-586-5030. We'll get you the deep details you need to make a wise investment decision, absolutely free of charge or obligation. DC Taylor, let's take a break right here. Let's thank our friends at Montrose Motors in beautiful Montrose, Pennsylvania, a short country drive to see a great selection of beautiful new Ford vehicles and wonderfully reconditioned, top-quality pre-owned vehicles. Hard to come by these days, and they have them at Montrose Motors. Not only that, DC Taylor.
Yes.
It's a great family dealership. You'll go in as a stranger, leave as a friend, and they have the coffee on, I'm sure of that.
Absolutely. I love it.
I'm sure my friends at Montrose Motors can make you that great deal. Your Financial Future with Nick Colarossi of NJC Investments, helped along by Mr. DC Taylor of Bold Gold Radio fame. Back after these brief messages. Please stay with us.
Looking for a dealership where you'll feel right at home the minute you walk into the showroom? This describes Montrose Motors to a T. You know, that Ford dealership in the great little town of Montrose, Pennsylvania? Not only do they have a great selection of new Ford vehicles in stock, they also have an equal amount of quality pre-owned cars, SUVs, and trucks. It's just a short country drive to the no-hassle Ford dealer Montrose Motors on Grove Avenue. Ask for Andy Bennett or Doug Thomas. These guys really have never met a stranger. You'll end up friends.
Nestled in the rolling hills of beautiful Clarks Green, Pennsylvania, you will find NJC Investments, a capable small-town firm with local values working right here for the citizens of our own community. Whether it's retirement planning, college planning, or just building up that long-term nest egg, the advisors at NJC Investments have decades of experience helping your neighbors achieve their goals. Why don't you get to know NJC Investments too? You can reach us at 570-586-5030. That's 570-586-5030. And we welcome you to join us weekly as we broadcast the Your Financial Future program on 94.3 FM The Talker, Saturdays at 9 a.m. NJC Investments, helping to take the mystery out of your financial future.
Securities offered through Lee Baldwin & Company, LLC. Member FINRA SIPC.
Welcome back to Your Financial Future program here on 94.3 FM The Talker with Nick Colarossi from NJC Investments, and I'm the producer here, DC Taylor. And Nick is on the phone this week. We're distancing. So, Nick, how are you?
Boy, are we ever physically distanced this week, but it's working out just fine, DC Taylor. I'm doing great. Looking forward to the rest of this great weekend. But in the meantime, I have some great investment ideas to review right here. As you know, over the last few weeks, we have been talking about different inflation hedges. A lot of investors, I saw a statistic somewhere, and I can't remember if it was Americans or investors, 77% of which, one of those two, and it doesn't really matter because it's on a lot of people's minds, but 77% very worried about inflation in the United States. And over the last few weeks, DC, you know, we've been doing some inflation hedges. I brought along 4 more quick ones today, 2 of which are closed-end funds and 2 of which are ETFs. And the first 2 closed-end funds from PIMCO actually carry quite interesting monthly income streams and average annual distribution. So let's start right there. First up is the PIMCO Income Strategy Fund. This is a closed-end fund, symbol PFN. This fund is up 3.5% year to date. This has a 9.36% distribution yield. This is paid out monthly, and PFN is an income fund built with some floating rate bonds in it, therefore a little bit protected against rising interest rates, again up 3.5% year to date on PFN. Next is the PIMCO Income Strategy Fund, PFL, another closed-end fund from PIMCO. I think they're the best bond managers on the planet. PFL is up 4.93% year to date because this has even more floating rate instruments inside this particular fund. It has a distribution yield of 9%, and again, paid out monthly. Let's turn to some TIPS funds. And TIPS funds, Treasuries wrapped for inflation, generally known as hedges against inflation. The first is from iShares. This ETF symbol is TIP, quite interesting, quite easy to remember. Down 1% year to date with only a 1% dividend yield. But again, we would expect them to be defensive if we get rising inflation. And I'll wrap up with another one from PIMCO, and this is an ETF. The symbol here on this TIPS fund is the PIMCO 15-plus year U.S. TIPS strategy. Symbol is LT. PZ. This is down 7.8% year to date. It is a 5-star Morningstar fund. The TIP fund, a 4-star Morningstar fund. Now, LTPZ from PIMCO has a 1.54% dividend. Both those more defensive. The first two, the closed-end funds, doing well right now. It depends on how much inflation we get, but there are 4 potential hedges against inflation. Do your own due diligence. Do your own homework. If you need help from us at NJC Investments, give us a call. Just for full disclosure, DC, we do own all of those strategies for certain investors at NJC Investments.
All right, very good, Nick. Well, you may not be able to see it from here. The red light shining on my face, and it is blinding me. You know what that means, right?
Well, I can't see it, but I can feel it. It must be time for Mitchell's Mailbag.
Yes, it is time for Mitchell's Mailbag here on the Your Financial Future program. This is where we answer your questions, and we'd love to hear from you. Send an email to nick@njcinvestments.com and put in the subject line Mitchell's Mailbag. And Mitchell Dimitrik is on the phone with us to grab some more questions. Hi, Mitchell.
Hello, DC Taylor. Hello, Nick. How are we both doing today on this beautiful Saturday morning?
We're doing just great. It is a beautiful sunny morning here. Hope you're enjoying it, enjoying spring, and we're ready for your questions.
Well, I'm ready to ask them.
All right, Mitchell, let's get right to it. Question number 1.
All Alrighty, question number 1 comes from Dan in Clark Summit. Dan asks, I heard you talk about Kathy Wood of the ARC funds about 6 months ago. Now I'm hearing her mentioned all the time on Fox Business and elsewhere. Do you think all of this overexposure will hurt her return? I have noticed that all of her funds are negative so far in 2021.
All right, Dan and Clark Summit, thanks for listening. And Kathy Wood, kind of the manager of the year. We brought her to you months back in 2020, just a terrific track record. And we'll see how she does in 2021. Now, don't forget, Kathy Wood, she is a growth manager, and she manages for the future. We brought you an interview a few programs back. It's got to be a little over a month ago now, DC, I think, with Kathy on Bloomberg. And she said she is managing for the next 5 to 15 years. And she is fully invested in growth and technology. But if you'll remember, she said, I don't think you as an individual investor should be. You should have some powder dry. And boy, was she right, because the technology sector, the NASDAQ has had a 10% correction since she shared those words with us. And if you had some powder dry, my best guess is to average into those funds if they fit, if they're suitable for your portfolio and you have an interest in investing in Kathy Wood's funds. Now, out of the 5 managed funds, Dan's right, 4 of the 5 are down for the year. The flagship fund, ARKK, is down about 10% year to date. The autonomous vehicle and electric vehicle is actually up about 4%. That's ARKQ. These are all ETFs run by Kathy Wood, not recommendations from us at NJC Investments. They are aggressive and meant to be for long-term holders. ARKF, the fintech fund, is down 1% year to date. The next generation internet fund, ARKW, down about 3% year to date. And her genomics fund, ARKG, down about 10% year to date. But again, this is in a sector that is aggressive, that has had a correction, and you need to be a long-term investor if you're investing with Kathy Wood. But yeah, you hear all across Fox Business and everything else these days, GC Taylor, they're all referencing her, but who brought her to you first?
Your Financial Future program right here on The Talker.
That's right. That's Kathy Wood, C-A-T-H-I-E Wood. If you're looking her up on the internet, I think she has a fine story. Again, not suitable. Her funds are not suitable for all investors. Be careful. Do your due diligence. If you need help, need any deep details, give us a call at NJC Investments. We'll get those out to you.
All right. Well, let's get to the next question in Mitchell's mailbag. Go ahead, Mitchell.
Alrighty, question number 2 comes from Brianna in Wilkes-Barre. Brianna asks, last week you spoke about getting income from technology stocks. Can you explain that one more time, please?
Yes, I can, Brianna, and thanks for listening in Wilkes-Barre. What I brought to you last week were closed-end funds in the technology sector that actually sold options calls against their positions. So what that means is if you had, let's say, 100 shares of Apple and you wanted to sell your shares, if the stock got to, let's say it's trading at 120 now, you could sell a call if you wanted to sell it to somebody. If the stock got to 130, they would pay you a premium to do that, and you would keep that premium. Well, it's the same concept, but they sell thousands of calls against their positions, bring in large premiums to do that on these technology stocks, and they share those premiums in the form of a distribution. The 3 I gave you last week, 3 had monthly and 1 had a quarterly distribution. So you were able to get an income stream by owning portfolios of technology stocks that were managed for income. I'll just give you the symbols quickly that I brought you last week. The Nuveen NASDAQ 100 Dynamic Override Fund is QQQX. That deals with the 100 top NASDAQ stocks, and that had a dividend rate of over 6%. The Columbia Seligman Premium Technology Growth Stock Fund, STK, that has the quarterly dividend, the annual yield on that over 6%. The BlackRock Science and Technology Trust, symbol BST, with a monthly distribution, the annual yield about 4.2%. And the Allianz GI Artificial Intelligence and Technology Opportunity Fund, symbol AIO, and that has a monthly distribution, the annual yield of over 5.6%. So, yes, there are ways to get income streams from the technology sector.
All right. Well, we got time for one more question in Mitchell's mailbag. Mitchell, you ready?
Yes. Last but certainly not least, question number 3 comes from Charles in Hazleton. Charles asks, I used to get a yearly update from Social Security about my retirement. I don't seem to get that anymore. Can you tell me how I can find out how much Social Security I can expect in retirement?
Yes, Charles, and thanks for listening in Hazleton. Yet that's a great question. I used to get those same forms. A lot of people remember getting the forms from the Social Security part of the government telling us, here's what you've earned, here's what you can expect in retirement. They do not send out those forms anymore. They cut that out a couple years back. The only way to get those numbers, what you can expect from Social Security in retirement, is to go to the Internet and go to SSA.gov, and you can then create your own account. It's very quick. They'll ask you a few questions. You'll be able to create a login at SSA.gov and get that information that Social Security used to mail to you. And that is so important. One of the first questions we ask investors when they sit down to plan out their retirement, what do you expect to get from your 401k or your retirement plan at work? And what do you expect to get from your Social Security payments? How much do you expect on a monthly basis from Social Security? Because that generally figures into your retirement income, and in some cases plays a very big role in your retirement income. So again, SSA.gov, you can set up your account and get the information you need.
Great. All right. Well, thank you for your questions here on the Your Financial Future program. It's Mitchell's Mailbag, where we answer your questions, and you can get those questions in. Send an email to nick@njcinvestments.com and put on the subject line Mitchell's Mailbag, and Mitchell rounds them all up and gives us a nice variety every week. Thank you, Mitchell, Mitchell Dimitrik, our always intern, for doing that.
DC, Nick, thank you for having me on the show each and every Saturday morning. I'm looking forward to next week's question.
Well, thank you, Mitchell. You do such a great job for us. It's our pleasure to have you on. Enjoy your spring weekend, and we look forward to hearing from you again on Easter weekend next week.
Sounds good. Take care.
That again, Mitchell Dimitrik, our always intern here on the program, does a great job for us, DC Taylor, each week.
He sure does. Always good to hear from Mitchell every week.
Yes, we look forward to that. Now, I know we're running short on time, DC, on this phoned-in version of the program. It's hard for me to judge, being that we are so physically distant. How much time do we have left?
You got about a minute and a half.
Oh, better just give you the names of those 7 stocks that could make you a millionaire. We'll start here next week. I'll give them to you now. This comes from InvestorPlace.com. Teskin Gedgel writing for Investor Place on March 22nd. I'll give you these. You can look ahead at the article. It's a free article, InvestorPlace.com. The stocks are Cloudera, CLDR, Electronic Arts, EA, Facebook, FB, MasterCard is MA, PayPal, PYPL, Sony, SNE, and Uber, UBER. We're going to take a look at them next week to see if Teskin Gedgel has a point on these, TC.
Okay.
And with that, I want to thank you for your help on this morning's program.
You're very welcome.
And I want to remind everyone, there is never a bad time to make a good investment. If you have any questions on anything we covered this morning or any other financial matter we can help you with, give us a call at NJC Investments, 570-586-5030. Thanks so much for tuning in this morning on 94.3 FM The Talker. May God bless you and may God bless America. Enjoy the Holy Week. We'll see you next Saturday.
The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities offered through Lee Baldwin & Company, LLC. Member FINRA SIPC.